Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Hi there and welcome to the ISE FX Options Weekly Outlook for September 27th to October 4th. I'm your host, Jason Ayres, founder and president of OptionSource.net. As always, we're going to take a look at our weekly U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. We continue to identify that 80 to 82 focal area as being a significant area of resistance. We did see prices reject off of this particular level last week and suggested that we would likely see some consolidation and some support in at that 77 to 78 focal zone. Now, despite the fact that prices dipped below there throughout the week, we did manage to close right back into this key area. That being said, any consolidation in here and push towards the upside is again likely to meet with some resistance and possible rejection in at that 80 to 82 level that has played a very significant part over our last couple of outlooks. It is important to note that this particular level here also represents a 38% retracement of that large move that we witnessed to the upside, further suggesting that this is a very significant support level and something that we should be paying very close attention to. Our MACD suggests that we still continue to trend strongly to the upside despite this backfilling that's occurred over the last couple of weeks. The momentum is definitely tapering off, which is something we need to consider, and that's obviously translated in a pullback into this area that we've been identifying. So we will be watching very closely as to how prices behave within this price range. If we do happen to see prices break once again below the 77 to 78 focal zone, then we will be targeting that 75 to 76 area as the next likely area of support. All right, let's take a look at our first ISE FX options pair value, the CDD, the US versus the Canadian dollar, recognizing that this is a daily price chart. We suggested a break below the 104.5 to the 105 focal zone would likely find some support in at the 102 to the 103. Now, that being said, any sort of consolidation there would likely make its way back up into that area where it broke out of last week, recognizing that there is the possibility of a rejection in this area. If we look at our MACD, we can see that prices still continue to trend strongly to the downside. Our RSI is suggesting that there is indeed still momentum to the downside, and we can't rule out the possibility that we may be making our way back down to par. Our next logical target, should this 102 to the 103 focal area not hold, is back into this 101 to the 101.5 range. Now, our YUK, our US versus the Japanese yen, seems to be wrought with indecision as we appear to be forming a sideways triangle. Last week, we suggested that the 108 to the 108.5 was the likely target as prices continue to move towards the upside. However, we did see quite quickly prices turn back around. If we look closely here, we seem to be finding some support in at that 105.5 to the 106 focal zone that we've identified here. On the bigger picture, we have two key areas of support and resistance that we're looking at right now. We have our 103.5 to the 104 to the downside. We have our 108 to the 108.5 still to the upside. That being said, we have to look very closely at our pivot points. A break above this level here in at the 106.5 would likely signal a move towards that 108 to the 108.5 again. We also can't rule out the possibility that a break below that 105 is also likely to play down to the 103.5 to the 104. So, folks, again, a little bit of indecision here with the YUK, so we need to watch very closely with respect to which direction prices break out over the next week. If we move down into the and have a look at our MACD, we can see that we attempted to cross, but we're merely kissing at this point, with, again, the possibility of a continuation to the downside. Our RSI also seems to be leaning more towards that move to the downside. However, again, between both of these lower indicators, we do see a little bit of conflict or indecision as well, so we really need to focus on that price action as far as leading us into making any sort of a directional bias at this point in time. Let's move on to the EUI, the US versus the Euro. Last week we identified a bit of a support level in at that 68 to the 69 focal zone. We suggested a break through that would likely play down into the 66.5 to the 67, which is indeed what's taken place. You can see prices have bounced off of that, are now finding a little bit of resistance in at the 68 to 69 focal zone. We need to recognize that that area also represents a 38% retracement, or a natural resistance area on the preceding downtrend. Now, if we do see a consolidation and a rejection there, then the window is open for a continuation, which would likely find further support down at the 65.5 to the 67. Our MACD suggests a continued trend to the downside. Our RSI being below that 50% is still telling us as well that we need to pay attention to the possibility that this may just simply be a little bit of a consolidation lining up for a continuation further down. That being said, if the prices do not reject in this area, we would likely see prices move into that 70 focal zone, which we've identified over previous weeks as being a significant area of resistance. Well, we're almost singing the same tune with the BPX, the US versus the British pound, as we see prices drop down into that 54 to 54.5 focal zone that we identified as being a key area of support. Now, if we look at our MACD, you can see here that we seem to be trending very strongly to the downside. Our RSI is also confirming that. It's below the 50% level there, suggesting that we do have some momentum to the downside. Any sort of a retracement off of that 54 to 54.5 level may meet with some rejection in at that 55 to the 55.5, as that is a natural area or price range based on a Fibonacci retracement. If we do see prices reject and break below that 54 to 54.5 focal zone, then it leaves a window open for a move to the downside, where the next logical target would be in at the 52.5 to the 53 level. And finally, folks, we have the AUX, the US versus the Australian dollar. Much like our previous pair values, we're seeing a little bit of backfilling with respect to this currency pair. We suggested that a break below that key pivot point at the 122 pair value would likely see a push down towards that 116 focal area. We did see that take place. We saw a bounce off of that. We're now drifting up back into that 121.5 to the 122 area, which has now been identified as a key area of resistance. Now, if we do happen to push through this, then we're likely to play back into that 124 to the 126 focal area, which has been an area of resistance for quite some time now. If we look at our MACD, it's suggesting that we are in a strong trend to the downside, so we have to consider that, again, this may just be a natural retracement lining up for a continuation to the downside. Our RSI is sort of playing on that 50% line there, so we do have to be cautious with respect to our directional bias. Now, that being said, if prices reject in at that 121.5 to the 122, that 116 is a very significant area of support, and we would likely see a little bit of a consolidation there before it makes its move to any lower lows. This has been your ISE FX Options Weekly Outlook for September 27th to October 4th. As always, I'm your host, Jason Ayres, founder and president of OptionsSource.net. Thanks very much for joining me this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX Options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX Options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash settled in U.S. dollars and have a European-style exercise.